You know, for the longest time, AI has been all about hype. But today, we're going to forget all that. We are following the money. We're diving deep into the world of decentralized AI protocols, the ones that are generating real, verifiable, on-chain revenue. These are the engines powering a whole new generation of autonomous agents and, honestly, building the financial infrastructure of tomorrow. So how did we even get here? Well, we'll kick things off by tracing the big shift from hype to real-world execution. Then, we're going to get into the weeds of the AI infrastructure stack that's making this all possible. We'll follow the money to see who's actually winning. We'll look at the incredible rise of truly autonomous AI agents, and then we have to confront the massive security risks that could derail this whole thing. And finally, we'll tie it all together with a clear playbook for navigating this new frontier. All right, let's jump right into the heart of it. Sometime around 2026, the game completely changed for AI in the crypto space. The market just stopped rewarding promises and started rewarding actual performance. For any serious investor, you have to understand this shift from just telling a good story to showing actual verifiable revenue. It's the absolute key to this whole sector. I mean, think about it. Just a couple of years ago, in 2024, slapping AI on a white paper was like a magic trick for minting million-dollar valuations. Fast forward to today, to what we're calling the execution era, and the market is demanding proof and wants to see tangible utility, real cash flow from things like GPU compute, and revenue you can actually go and verify yourself on-chain.
And look, this isn't just a story we're telling. The data totally backs this up. Just look at what happened when the market took a nosedive in the first quarter of 2026. Speculative consumer tokens, they got absolutely hammered, down 30%. But the AI sector? Down only 14%. Why? Well, it's pretty simple, actually. Their value isn't just built on hype. It's anchored to something tangible, a real-world service, computing power, which, as you know, is in a massive global shortage.
That kind of resilience, it points to something really solid under the surface, right? So what is the machinery that's enabling this new agent economy? Let's take a look at the foundational layers, kind of like the digital picks and shovels that are building this whole new world. Okay, so at the very heart of all this is the agent economy. Think of it this way. Our entire financial system, everything, is built for humans. An AI can't just walk into a bank and open an account. But blockchain, it provides this perfectly neutral ground where an autonomous AI can own its own digital wallet, it can hold assets, and it can pay for services, all without a human needing to sign off on anything. It's giving them true economic independence. This whole new economy basically rests on three critical pillars. First up is compute. That's the raw horsepower from GPUs that acts as the fuel. Second is intelligence. These are the decentralized marketplaces where AI models get trained and deployed, the brains of the operation. And finally, you have agency and privacy. This is the crucial layer that gives these AIs the framework to actually act securely and on their own. All right, so enough with the theory. We've established that verifiable revenue is the new name of the game, the new metric for success. So let's actually look at the on-chain numbers and see who is really winning this race. And this, right here, is the million-dollar question, or maybe billion-dollar question, that every institutional investor is asking. The stories are compelling, sure, but where is the actual cash flow? Where's the proof? And here it is. The proof is right there on the ledger. And I want to be super clear. This is not a projection. This isn't some analyst's guess. This is real, on-chain revenue from just the first 3 months of 2026. And the numbers, I mean, they're just staggering. You've got Bittensor not just leading the pack, but absolutely dominating. It's pulling in more than 15 times the revenue of its closest competitor. There's no question a real hierarchy is formed here. This quote from the analyst community just nails the current sentiment perfectly. The era of just chasing hype is over. And why? Because in a really volatile market, sophisticated capital looks for a safe harbor. And right now, that harbor is auditable on-chain earnings. Simple as that. So how in the world is Bittensor generating this much revenue? Well, it's not a single product. It's a massive decentralized marketplace for AI. You can think of its 120-plus subnets as these specialized teams. And each one is competing to be the absolute best at a different AI problem, whether it's data analysis or image generation. This model is so effective that it's now training models that can seriously compete with the big, centralized labs. And it's all moving to a direct fee-for-service economy. And just look at this. This one number shows you the incredible power of Bittensor's model. We're not talking about the entire network's revenue here, no. This is the daily income from just one of its 120 subnets. It's become a profitable microeconomy all on its own. This is what a real, functioning fee-for-service ecosystem looks like at scale. It's amazing.
So all this powerful revenue-generating infrastructure is being built for a reason, right? It's the foundation for the next big evolution, AI agents that don't just analyze and recommend, but actually go out and execute tasks all by themselves.
Now, the crucial point is the distinction here. A bot, it just follows a rigid script. An AI agent, on the other hand, uses a large language model to reason, to plan, and to adapt on the fly. It has its own on-chain wallet and can make independent economic decisions to achieve a goal. It's this massive leap from simple automation to true autonomy. And frameworks like OpenClaw are what make this all real. It's the bridge between the AI's brain, the language model, and the real world. So, for example, an AI could come up with a really complex trading strategy. And OpenClaw gives it the hands it needs to connect to an exchange's API and actually execute that trade. It turns thought into action. And this isn't some niche little experiment. The execution rails for AI agents are being laid down by the absolute giants of the industry. When you see names like Coinbase creating agent-specific wallets and Binance building standardized skills for them, you just know a major shift is underway. We're even seeing totally new asset classes pop up, like these yield-bearing personalities, where you can essentially buy equity in an AI's future earnings. Wild stuff.
But, and this is a big but, with all of this incredible innovation comes a massive, undeniable risk. This rapid development has created what I'm calling a billion-dollar blind spot that every single investor in this space needs to be aware of and actively price into their models.
$450 million. Let that sink in. That's how much was stolen in crypto hacks in just the first few weeks of 2026. This isn't a series of minor issues. This is a catastrophic failure of security across the entire industry.
And this wasn't one single dam breaking. This was 45 different leaks springing up all at once. It points to a deep systemic issue with the plumbing of the entire industry. The vulnerabilities aren't isolated to one or two projects. They are everywhere.
And the attacks are coming from all angles. 40% from smart contract bugs, which proves that even audited code isn't safe. 35% from human layer attacks like insider threats or social engineering, and another 25% from core infrastructure exploits. The threat surface is targeting the code, the people, and the very systems these protocols depend on.
So this brings us to the bottom line. As an investor, how do you balance this massive revenue-generating opportunity against such profound and systemic risks? What's the playbook here?
Okay, here is the playbook for 2026. First, you have to follow the verifiable revenue. It's the strongest signal in a very noisy market. Second, invest in the picks and shovels. The demand for core infrastructure, like compute power, just isn't going away. Third, you've got to recognize the paradigm shift. The market is moving from proof of stake, where value comes from capital being locked up, to proof of intelligence. This means value now flows to protocols that can demonstrate the most useful verifiable AI work. And finally, and this is crucial, treat security as non-negotiable. The $450 million in losses is a really harsh lesson that risk management cannot be an afterthought.
I'm going to leave you with this question. We have spent decades building a know-your-customer framework for our human-run economy. So as we begin to unleash autonomous agents to control billions in capital, the next great challenge is crystal clear. How do we build the framework for Know Your Agent? The answer to that question will define the next frontier of this entire economy